Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures and Crypto Market Outlook for tomorrow's trading, tomorrow being Friday the 8th of December. Jumping on in, as always, before we start off the newsletter, make sure to go down and click on the Join the Daily Outlook newsletter here, and that will let you sign up for our email list so you'll be notified every time one of these videos comes out. And along with that, inside the email, we go over all kinds of different stuff, from stocks to cryptos to ICOs and IPOs, and anything interesting that's coming out will go in that newsletter, so make sure to sign up so you don't miss any important information. Along with that, make sure to sign up for the free 3-day trial in the live trade room. That way you can sit down with us, hang out for a couple days, and see what we're all about. You can see our screens, you can see our charts, you can see everything in the way that we're approaching the markets, analyzing the markets, trading them, etc. Really good way to get an inside look at how everything works. Now, jumping straight in here, right off the bat, we've got Euro, and the Euro is finding a little bit of support off of the lows of the wedge, lows of the channel, but for the most part, it's setting up in kind of an interesting way in that we have the overall bear channel working lower, but we still have a bull trend overall, right? We still have a nice bull trend working its way higher. So this, in the grand scheme of things, if you zoom out to something like a daily chart, might have the appearance of somewhat of, well, a flag. So when we're looking at a daily chart, you know, zooming really, really far out, again, we have a kind of a view of somewhat of a flag or maybe a descending wedge on the daily. And this is the same thing that happened back here before another breakout. Now, with the overall trend being massively bullish to the upside, really buyers are looking for any opportunity they can get on buying a pullback. And when it comes to pullbacks, well, we had this major swing low that acted as a huge level, and we have yet to retest it. Very frequently when we have these major levels like this, where we find a bottom, they try breaking through it, they test it as support, and they prove it with resistance, when we break above it, they generally want to come back and retest it. And that's going to give us a huge level of support right at the lows around 16,830. And if we can get a retest of 830, that is going to be a monstrous buy zone on the Euro if we can get a dip down to that low. Now, from there, it's sort of a deciding point. Do the buyers want to defend it and push the market back up to new highs, back above 1.2? Or are we going to run into a situation where that breaks down and we end up using it in resistance as you know, in the near future? If we zoom in a little bit closer here, overall the price movement for the last couple days, we've had this nice little flag that's been forming on the daily, but we also have a relatively aggressive descending wedge that we're trying to break out of the highs of. As it stands right now in the short term on the hourly chart over the last few days, we have a bear trend working with a much larger bull trend in play in the grand scheme of things. So the general best way to approach something like that is to wait for the short-term bear trend to subside and then look to jump back on in as a conservative buyer. And that basically means that we need to see the bear trend break, see a retest of those extremes, and then look to buy either on the initial entry or after a subsequent pullback as the more conservative entry. We are bouncing off of two levels of support, double bottom rather, off of the lows of the channel. We are seeing a little bit of buy support coming in, but again, I would really love to see a retest back down to 6,830. That would be a huge buy area of interest. And of course, you know, somewhere in between there, we have this major swing high, major swing low kind of culmination at around 17,200s to 300s. That might prop price up for a little while ahead of that. Overall, though, everything is still looking really strong to the upside in the bigger picture. In the short term, though, we need to wait for the sellers to get out of the way before we can jump on the buy to push it back up. Over on gold, we have a bear move down, completing a lot of objectives to the downside. And we're getting a little aggressive on the lows. They've blown off the bottom of the wedge, and they just kept going. Now, overall, that could be a sign of a little bit of exhaustion. Now, again, if we zoom out to a larger time frame like a daily chart, we can see that really in the grand scheme of things, we had this big rally up, a slight pause, another good rally up, and then we started getting those really wide pullbacks and just kind of chopping around. And when we're looking at the price here, we can see that none of these lows have been contested on the way up except for this one, and that was the trap. Now, if we look on the other side of things, all of these swing highs were tested, except this one, which ended up being a trap. So we're starting to see a semblance of a potential range forming now, with the market kind of ping-ponging back and forth. If we zoom out even further, we can see that generally speaking, the trend is down, you know, but we're talking on since really the beginning of 2013, and it's a very weak trend to the downside, and buyers are attempting to take back over. The only way that the buyers are truly going to prove much of anything is if they break the overall swing highs and get a true higher low reversal. And then from there, the buyers are going to be buying in on that next dip to push the market back up. Until then, though, we're just kind of dealing with this range that we're sort of stuck in. And the 60-minute is showing us that we're a little bit overextended to the downside. That could lead into overnight buying pressure for a correction back up. Overall, though, the sellers will still be looking to sell this down to kind of complete some of those larger objectives when you zoom out again towards, maybe looking for those major lows at around 1205. But it's right now, generally, it looks like they've overdone it a little bit. I would expect some overnight buying pressure, mainly just the sellers exiting on profit, and then going from there in the overnight, looking for maybe some better selling opportunities on a retest of that previous swing low at 63.2 to attempt to drive the market back down. But in the bigger picture, the buyers might still be trying to get that reversal back up. We'll have to wait and see. On crude oil, we caught a big lift to the upside. The market wanted to try to break down. They arguably did a pretty good job of it. But when they hit those lows, they ended up trapping the bottom with a little wick down there and then just a monster rocket the other way. And now we're ripping back up again. Now, a couple lines in the sand that we need to worry about here. First of all, this obvious swing-to-swing area is going to be a big line in the sand, or a zone in the sand. Something we talk about a lot on the cryptocurrency side of things. Ethereum, which we'll get to in a little bit here, has the same sort of situation going on, where now crude oil could use this as resistance to try to drive the market back down. If we were coming off of something stronger than just a little trap low on that drive down, I would be a little bit more pumped up about the buy side. But until we get a trap of, the major swing low down here or some of these other swing lows a little bit further, arguably it's just buyers that are buying in underneath the low. They realize they were wrong, they buy a little bit more, and they look to exit everything on the retest, and that's right where we are right now, right inside that zone. So in the overnight session, looking for this to try to get a turnaround to drop the market back down towards the lows and see if they can challenge those bottom again. If it does break out to the upside, then we're looking to use that same zone as a level of support instead. Over on the S&P, getting good continuation to the upside. Buyers are showing a good amount of strength off the 200 period moving average once again. We had that original bounce there. They missed that major objective we were looking for at around 621. Never quite hit it before catching a rally back up. And now we're dealing with a situation where we had a bear channel that broke. Tried going a little bit wider, that broke. We're starting to see them breaking all of the levels of resistance that are coming across the highs, and that's a good sign for the buyers. The buyers will be looking for those signs of strength to push the market back up, and arguably, we already have a really strong leg to get things started. Buyers are going to be looking to buy below that most recent hourly bear candle. Pretty much anywhere that is considered cheap, they're going to be trying to buy into to push the market back up. Major swing highs are going to be the objectives, and of course, the all-time highs back up again would be a big target for the S&P traders. So that's going to do it for the outlook on the future side of things. Looking at the news for tomorrow, out in the morning session out of the UK, we have the manufacturing production for October forecasted at a negative 0.1%. At 8:30 tomorrow, we have the non-farm payrolls. Oh joy, right? We get all kinds of fun stuff going on non-farm payrolls. Forecasted at 200,000, previous was 261,000. We also have the unemployment rate tomorrow at 8:30, and that's forecasted for November at 4.1%, which is the same as the previous. So we do have a good chunk of news going on tomorrow to really get things moving. And with non-farms, a lot of times non-farm payrolls tend to be an early in, early out kind of day where nobody really wants to hang out anymore after they've traded through it. It might be the same thing tomorrow, especially considering that we're going into December. We have holidays not too far away now. A lot of traders start taking breaks as we go into December. A little bit more of a sentiment of get in early so you can get out early and not have to worry about it. Over on the crypto side of things, we have Bitcoin continuing to smash higher. Now, interestingly enough, this is Bitcoin using the Bitfinex data feed. Now, the reason I point that out is because if we look at Bitcoin on Coinbase, one of the largest US providers of Bitcoin, we can see a little bit of a drastic difference, right? They pushed all the way up to almost $20,000 per Bitcoin. And yeah, you heard that right. They made a high of $19,697. They were really the only exchange to show that lift up. So because of that, I'm opting to go through a different exchange because, well, they're the only ones that showed that, and I really can't trust their data feed right now. It's the same thing that happened with Ethereum through Coinbase once again. There's a flash crash all the way down to 10 cents and then all the way back up again. Seems to be that Coinbase can't really manage their data very well. Either way, though, I'm going to be using the Bitfinex data feed until all of that is sorted out. So overall, the average price for Bitcoin, excluding GDAX and Coinbase and all of that kind of chart data, is around 15 to 16,000. Now, that's still really good. We're up over the past 24 hours about $2,200. So we're floating at around plus 16% on the day, and Bitcoin is certainly just an absolute rocket ship to the upside. The one thing that has me a little bit concerned is how quickly this has gone up. Now, this is obviously, especially when you look at a daily chart, a parabolic curve. It's about as picture perfect of a parabolic curve as you can get. There are no other look in Google Images for parabolic curve and you're going to see a picture of Bitcoin, because that's pretty much what it is. Now, when we have this type of curve, it begins to get to a point where either explodes off of and just keeps going up, where you see, massive gains every single day, which is what we have been seeing. But they don't talk about what happens after that parabolic curve has come to a decline. Now, with the markets, that is possible. So a pullback, so far the pullbacks haven't really been that big. I mean, in Bitcoin terms, right? Haven't been that big. That first pullback that we had back here, that was about 38%. Decent size, right? That's certainly not small, but for Bitcoin, that's not a big deal. The next pullback after that was about 39%. Are we seeing a common trend here, right? 38, 39. The next one now is 30%. We're starting to see those percentages decline a little bit as the market gains more and more and more strength. And that tells us that an average pullback right around 30% and getting smaller means that we could be looking for the next pullback to be about 25% going along with that trend. So let's say, as an example, it were to pull off the highs right this second and start pulling back down. You'd be looking for a pullback to around 11,000 to 12,000. Right, in that zone is going to be where the hot spot is for the pullback. Maybe a little bit lower than that if they want to continue the 30 to 35%. But between 11 and 12,000, it's kind of the sweet spot for that 25 to 30% pullback area off of the current high right now. And the current high right now is sitting at just under 16,000 according to Bitfinex data. Right now, it's really tough to want to do anything but sit and wait, right? The market just keeps going up and up and up. And I think, honestly, a lot of the reason why it's going up is because everybody's doing the same thing. Nobody wants to sell it. Every time they sell it, a month later, it's at a brand new high and they missed out on another $1,000 of rally. So we're dealing with a situation where all of the buyers, they're already in, they're buying more. Maybe they're coin averaging in, once a week with their paycheck or, whatever their way of doing it is. But they're not letting them go, right? They're getting the coins, but then they're hanging on to them. And it's creating almost an artificial scarcity where the coins are there, but nobody's using them because it just keeps going up. Well, when everybody is in profit and everybody starts taking profit and they start driving the market back down again, that's where you get those big pullbacks of 20, 30%, sometimes 40% like we saw early on in the rally. And we're very likely going to see one sooner than later, especially with this monstrous blow-off. Every time we have a very aggressive leg in an otherwise strong bull trend, right? Strong bull trend, and then boom, it's like they flipped a switch and the thing goes crazy. A lot of times you get that heavy pullback that follows after. Now, I'm not going to be the one that tries to call a top on Bitcoin. That's just not going to happen. If you're doing anything other than buying Bitcoin, you're doing it wrong. But what we're looking for is buying that dip, right? Buying a good 20% back, 25%, 30% back, waiting for those sale prices to jump on in, because right now it is at the highs and it is expensive and it just keeps getting more expensive. So I'm not looking to do anything with the coins that I've got. I'm hanging on to them. And I'll buy more if it takes another dip lower. But until then, really, we're just kind of waiting and seeing what happens. Now, as far as the data from GDAX or Coinbase, I'm just kind of ignoring that right now. Obviously, if you were trading that, well, their exchanges probably crashed. But if you were able to trade that, you probably had some fun. I stayed away from it personally. I don't really deal with Coinbase a whole lot anyway, other than their data feed. But for the most part, we have a nice bull rally to the upside, seeing if we can hit 16,000 across the board for all of the other major exchanges to see if they can tap that big psychological level. Over on Ethereum, Ethereum is in a situation where we have that, I don't know where all my drawings went, but we have that situation where we had that line in the sand forming inside of here. And for the most part, we're just kind of ping-ponging back and forth. We've now come back down to the lows of that line in the sand, and we've retested it as resistance. And the market responded in kind as resistance. Now, as we start approaching these lows, these are going to be major levels of support at around 385.16. Maybe a little bit higher along the low closes, or again, that previous swing. Remember what we were just talking about on the futures side, where you have that major swing low, they try breaking underneath it, fail, they come back and retest it. That is a big launch pad for the move back up, not to mention that it lines up almost perfectly with $400, that other big psychological level that we waited a good 3 to 4 months to hit. Well, we're right off of that area again, and we're trying to make another push back to the upside. Now, the issue is, until this line in the sand is broken, we're going to have a hard time. So really what I'm looking to do, my plan of attack on Ethereum, is to buy when it's in these levels of support, take a little bit of profit off when it gets to these areas of resistance. Not all of it, looking to hang on to some of it, because it might pull back and you can buy more. And then it goes back up, you scalp out of some, you buy more, etc. But eventually, we're likely going to break out. And when that happens, you want to have something in the bag so you can sell when it goes back to the highs again. And that's really the primary objective, back to 500. And then we have Litecoin. Litecoin catching a nice dip lower, as well as Bitcoin goes to the moon, or past the moon. It waved by to the moon as it approached Mars. Litecoin pulling back as well. Largely, what we're looking for here on Litecoin is a lot of fib buyers are buying off the 61.8. It was almost a perfect bounce off of the 61.8. And along with that, you know me, I'm not a big fan of fib levels by themselves. It's not good enough. But if we combine that with the earlier wedge low, we're a little bit through it, right? So we've kind of overdone the bottom of the wedge, and that could show us signs that, you know, this might be a sign of exhaustion for the sellers and they're just running out of steam. And the fact that the 61.8 held so well, and if we drive this back a little bit, we can see major support not too far away from there as well at around 84. Buyers are picking it up pretty aggressively, and that's a good sign. And it's another one of those situations where buyers are going to be buying cheap, right? We were looking at a wedge earlier in price, and we finally kind of broken out of that. Now that we've broken out of that, we've had 2 legs lower. That is usually what happens after a wedge breaks out. You get 2 legs and then a potential reversal back up again. So a lot of buyers are going to be picking this up on the low, anticipating a rocket ship back to the highs, and maybe all the way up to 106 to 108 to try to break through those tops. Right now, though, Litecoin, I think, is a buy cheap only kind of market, especially while Bitcoin is going absolutely bonkers. And then we've got NEO. Now, NEO, I've been a really big fan of NEO. Just the fact that they've been holding those same October levels over and over and over again have offered up a ton of scalps. Each one of them is procuring a good 5 to 10% bounce off of it. And if you're scalping 5 to 10% and you can do it 15 or 20 times, well, you've got yourself a pretty good market that you're dealing with. Now, the lows, it looks like they may be trying to widen it out a little bit. A level of support slightly lower at around $30.98 could definitely be in play as a slight adjustment, but that the same levels are holding true. 32.77, 26.82, and 23.21 are all holding. And off the highs now, we have a new one at 42.92, and we could arguably drive that a little bit lower to encompass that middle peak. And that gives us around 42 to 43 is going to be the zone. I actually like it a little bit further like that. There. So 42.40 is going to be the high zone. And the approach to NEO is the same that we were talking about on Ethereum. Every time it goes into one of these levels, you're buying some, scalping out some, but it's still hanging on to the bag, right? You get rid of a little more, it pulls back, you buy some more, you get rid of a little more, you get rid of a little more, it pulls back, so you start buying a little more, but you're always holding a little bit, because the way that NEO works is it keeps kind of consolidating for a good month or so, then you get a breakout and it seems to consolidate into a new range, and you want to have something on the table from earlier so you can get those cheaper prices kind of averaged in. But for now, NEO's just kind of back to its old games, trying to fade the lows and fade the highs, and that's what we're looking to do with it. So overall, everything looks pretty straightforward here. Over on ADA, a big level of support that we're coming into, and this is much easier to see on the daily chart. If we zoom into the daily chart, we can see that we have a major swing high that was formed that we broke out of. And this is one that a lot of times the market loves to come back and retrace its steps, and we're coming back to that area right now, and that's at 679. That is a monstrous area for potential buying support, and maybe it wants to come back to the line in the sand back at around 500. But either way, 679 is a gargantuan buy zone for the buyers to try to kick the market back up, looking for back to around 1200 to 1300, and if they really want to go flying, we might even be able to see all the way up to 2000. Now, one thing that I always like considering is, where did that first candle, when it launched out of ICO, launch back into exchanges, etc., where did that spike up to? Because those tend to be major levels of support and resistance, and that popped up to 2000. So 2000 is the major long-term objective over the next coming months, but for right now we are resting on a long-term buy zone that is getting ready to springboard the market back up towards the highs, and we're already seeing an initial reaction off of that point as it stands, looking really good. So that's going to do it for the outlook for today, or rather for tomorrow. As always, doesn't matter what market you're approaching or looking to trade, always make a plan. Trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.